You are watching EnergyNewsTV.com, your home for fresh energy news delivered daily. This is the early petroleum market report for December 20th, 2024. WTI crude oil futures fell around $69 per barrel on Friday, heading for a weekly decline as a strong US dollar continued to pressure the dollar-denominated commodity. On Wednesday, the Federal Reserve signaled a slower pace of rate cuts next year, driving the greenback to a two-year high and raising concerns about potential impacts on fuel demand. Adding further pressure, Sinopec, China's largest refiner, announced Thursday that the nation's gasoline demand peaked last year, further dimming the outlook for the world's top crude importer. Earlier in the week, oil found support from Energy Information Administration data, showing a larger-than-expected draw in U.S. crude stocks in mid-December, as well as Kazakhstan's backing of OPEC extended cuts, reversing plans to boost output. Meanwhile, crude is on track for a yearly decline, trading within its narrowest range since 2019, amid weak Chinese demand and rising non-OPEC production. Turning to the natural gas market, U.S. natural gas futures rose further to over $3.65 per million British thermal units on Friday, the highest in over 1 year, as bets of stronger global LNG demand magnified the outlook of higher domestic consumption. Longer-range weather forecasts calling for a modest cold front in the U.S. in mid-January drove the industry to raise demand forecasts. This coincided with data from the EIA showing that gas storage fell by 125 billion cubic feet, which is the second triple-digit draw for a second straight week, deepening the anticipated start to the withdrawal season. Presently, natural gas inventories are their second highest level in the last 5 years, but are quickly gaining on 2023 and will undoubtedly fall below that level in next week's storage data report. Meanwhile, the decreasing likelihood that Europe will continue to receive Russian gas through Ukraine drove investors to take long LNG positions as European Union members search for alternative gas sources. This raises demand for U.S. LNG at the turn of the U.S. presidency, with President-elect Trump pledging to issue more LNG export permits amid ample U.S. natural gas supply. This will create more natural gas and LNG-related jobs in the U.S. beginning next year. Thank you for watching Energy News TV, your home for fresh energy news delivered daily. Please be sure to like and subscribe to our page. Stay tuned for more fresh energy news.